This is the June 13th, 2018 update for the Income Millionaire Insider, and let's start by looking at the stock market reversal radar. We use the stock market reversal radar in an attempt to see where the stock market may be headed. As we can see, the underlying stock market mood swings have just started to potentially reverse here away from a point of being overly happy, possibly starting to come back now, back towards a point of neutrality. Just because the underlying stock market mood swings may be turning over the next week here and turning back towards a point of probably at least neutrality does not necessarily mean that the stock market will follow. So just because over the next week or so we may see some weakness in the emotions, we may or may not see that actual weakness in the stock market. Okay, it does not necessarily have to correlate by 100%. But let's check out some specific trades that we can make right now to potentially capitalize on this reversal of sentiment away from being overly happy and towards a more neutral point, maybe even a point of underlying stock market negativity.
Next, I want to tell you about Coupa, another high-tech company. This one is not yet profitable. It is pretty speculative. What they are is they're a database, kind of like Salesforce.com, or it's like a CRM. It's a big database, but it's used for companies and their purchasing departments to procure technology. And it lets them get it all in the same place and all up-to-date information, and they can share information. So for purchasers, for the buying department, the acquisition department, procurement of technology companies, this is the same as Salesforce.com is to a Salesforce. It's a very well integrated database that lets you have near perfect knowledge and maintain information and save a lot of time. It is spreading very rapidly. Everybody's using it. The company is its sales are growing enormously, and it is about to become profitable in the coming year. I don't want to buy that stock at 60. Here I'm going to show you how to acquire this company and or make a very good income while you wait to acquire the company. Because here what we're going to do is I'm going to sell the put option on this stock. And so what you're looking at here is I'm going to put in an offer for a month from now, July 20th put option to, I'm going to sell the put option to somebody who wants to buy a put option. This is somebody who is either speculating or wants to protect himself, who owns this stock and is afraid it's going to go down. So he's buying a put option, an option to sell. But I can sell him this put option for somewhere around $1.10 or $110 per 100 shares, or I can do 200 shares for $220, collect this money right now. But an even better trade is to move it out to September 21st. That's 3 months away, July, August, September. That's 1/4 of the year. And you see, what I'm going to be able to do is this was done at night when they didn't have a bid and ask, they only had the last. But what I could do at this current level is to sell a 50 put. Let's go back and look at this stock. I want to sell a put way down here where I would like to buy the stock. If I sell that for roughly around $1.50, the last trade, as I was doing this, was $1.77. But let's say I put in an offer to sell the put, to sell a $50 put. Remember, that's somebody buying the put. In my view, they're paying too much for a put option on this stock. So the 50 put is way down below where the price of the stock is, way out of the money, as we call it. I would love to buy it for $50 right now, but I would particularly love to have them pay me $1.50 a share or $300 for 2 contracts that I get to keep no matter what. I get the $300. I can go to a restaurant today, and I don't own the stock. I don't have to worry about it coming down. I will buy it if it gets down to 50 because then they will sell it to me. But in the meantime, what's happening there is, look, this is for 3 months. So at $1.50, 4 times $1.50, that's giving me $6 over the course of the year. I'm earning $6 on a $60 stock. In other words, I'm earning double-digit interest. I'm earning about 10% on this stock without owning it. I'm holding the cash, and I'm making 10% on that cash reserve, which I'm holding in case the stock goes down to 50 and it gets put to me and I get to buy the stock for 50. That I would love to do. But in the meantime, I'm making 10% on that cash just holding it. I have no risk, but I'm making 10% on the money and waiting for my opportunity to buy this stock at 50. Now that is a good deal.
So let's take a look at the simple clicks that we need to make to get that good deal. So here we are at the COUP options chain. Here we are, CCOUP. We are looking at the September 21st, 2018 options chain here, which as of today, June 13th, gives us 100 beautiful days until expiration. And we're looking at the put side of this options chain. So let's come over here to the put side. And Daniel is talking about selling the 50 strike price put. So we can get anywhere between $130 and $145 right now for selling just one put option. So let's start out the transaction here. We're going to try to sell this. So we're going to click on the bid and see the spread here. See how there's 15 cents. Let's try to get the best deal that we can and pretty much split the difference. So here we are again. This is our order entry form. Yes, COUP. Yes, the September 21st, 2018 50 put. Yes, we want to sell it. Okay, we only, in this case, we're just going to sell one. You can sell as many as you want and make even more money. The price that we want to do it for, let's try to split the difference and see what happens. Here is our midpoint, $138. Of course, I'm saying $138, and you're seeing it as $1.38 because for each options trade, it commands 100 shares of the underlying stock. So $1.38 times 100 is $138. So we can then click submit. It then brings up another pop-up box. It tells us again, is this what you want to do? Yes, this is what we want to do. We click transmit. And there we are. We are filled. Beautiful.
And one more stock I want to show you, which is another opportunity to do the same thing. Schnitzer Steel. There's a lot of talk about the steel industry and in general, but Schnitzer Steel is an American company that takes waste steel and old junk steel and melts it down and makes it into steel. It's very profitable. It's domestic. And to the extent that we are putting tariffs on steel that's imported, Schnitzer Steel, which is a domestic company which melts down steel, and if they drive the price of steel up a little bit, it will only be more profit for Schnitzer. You can see that this stock is already selling at a relatively cheap price. It's worth buying at this level. But again, we can do the exact same thing. Now, because this stock has been going down, I'm looking at an August put option. Again, I'm catching people making a mistake because they're wanting to speculate against Schnitzer Steel on it going down. They are buying a put option, an option to be able to sell this stock short. You see where it is right now? It's at $32.70. At almost 10% lower, I can sell a put option to that guy who wants to buy a put option. I can sell him that put option to be able to sell me the stock for $30. I can sell it to him for around 80 bucks. And that ends up giving me an annual 16%. And all I'm doing is holding a cash reserve. I have no risk. And if the stock does come down 9 or 10% down to 30 bucks, I would love to buy it. I would buy it today for 30 bucks. But in the meantime, if it doesn't ever come down, I will still keep doing the same trade, and I will end up making about 16% a year for holding cash and being available so that when the stock market does go down a lot, I'm going to be able to take advantage of it.
Schnitzer Steel. Try saying that too fast. Here we are looking at the SCHN options chain. Over here on the left, we are at the August 17th, 2018 expiration chain here. So as of Wednesday, June 13th, there are 65 days to expiration. But let's concentrate over here on the puts. And here are all of our strike prices. Just like Dan said, let's come down to that $30 strike price. And we can see that at this very second, we can get anywhere between 80 bucks and 100 bucks for selling one put option right now. So we'll open up this trade by clicking on the bid. Here we are, opens up our little order entry form. Yes, we want to sell a SCHN August 2018 $30 put. Yes, we want to sell it. Yes. We're only going to do one right here. You can do more if you want to make even more money. For ease sake, I am just going to keep it at 80 bucks. If you want to trade to make some more money, which you really should, you would enter in a higher price and just simply wait a while and you might get filled, right? But for ease sake, we're just going to make instantly 80 bucks. I'm going to click the submit form here. It again gives us all of the details. Do we want to do this? We say yes. And there we go. Order filled. Beautiful thing. Let's take a look now at ArcelorMittal. The ticker here is MT. This is an Indian company, but much of their production of steel is done right here in the good old US of A. There's obviously a lot of turbulence in international trade and in the steel business lately, which is impacting the value of MT's stock. But because much of the company's production is done here in the US, the current trade controversies, we believe, can only help the company and not hurt it. As always, the risk is we could be wrong. The infrastructure build-out, which is likely to occur over the next couple years here and really across the world, regardless of who controls the House of Representatives, will stimulate demand for steel regardless of the political issues happening today. The stock is already inexpensive compared to its current and future profits. I would be happy to buy this stock at 30 bucks, about 10% below its current price right now. In the meantime, we can earn a return of about 20% or more annualized without even having to own the stock. Now, earning a 20+% return through selling these simple put options and earning that return on holding cash is an unusually high risk adjusted return here, considering that all you are doing is being paid for holding cash. The worst case scenario is buying the stock at an awesome price, which we would be happy to do right now if we could. So let's take a closer look at this ArcelorMittal options chain here. Here we are. We have our symbol MT. We are on the July 20th, 2018 expiration here, giving us 37 days to expiration as of Wednesday, June 13th. And of course, we're going to look at the put side of things here. And Dan wanted to look at the $31 strike price. So here we go, and let's zoom in on this. We can make instantly anywhere between 37 bucks and 41 bucks selling one of these put option. So let's start the transaction here and potentially start to make 20% annualized just by doing this simple trade. Let's open it up. And here we are. Yes, the stock ticker is MT. We are looking at the July 20th, 2018 $31 put. We are looking to sell it. Here we have a quantity of 1. It is a limit order. And what price do we want to do? For this sake, we're just going to sell it at $37, but I highly suggest that you put in a slightly higher price and just wait a little bit and see if you get filled. That's how you really get a better deal. But we're just going to put in $37 for right now. Going to click submit. That other pop-up box will come up. Here it is. It gives us all the details. Again, we say yes, happy to do it. And there we go. We got filled. Beautiful. So let's go for 4 today. Let's take a look at Regeneron Pharmaceuticals, ticker here REGN. Currently trading at about $311 a share. Regeneron is in the research, development, and commercialization business of drugs that cure a bunch of medical conditions, including cancer, different inflammatory disorders, and degenerative eye diseases. Elia is one of their most popular medicines, and Elia treats wet AMD, otherwise known as wet macular degeneration, which is a kind of chronic eye disease that causes blurred vision or even blind spots in your normal field of vision here. Obviously not good. It's caused by the abnormal blood vessels in your eyes that potentially can leak fluid or even blood into the macula. And the macula is that part of the retina of our eyes that is responsible for central vision, so it can potentially block that. Obviously not good. You can see here how sales of Elia, both in the United States and outside the United States, just continue to grow and grow and grow every year. It's a beautiful thing. The overall revenues of Regeneron grow every year. The overall operating margins are increasing. The overall net profits are increasing year after year. All awesome things that I like to buy in a stock. And the great part about it is it's a great stock making more and more money, but the chart looks horrendous. This is my favorite setup. Regeneron's Elia also treats diabetic macular edema, which is slightly different from wet AMD. Diabetic macular edema is still that accumulation of fluid in the macula, again, that part of the retina that it controls that most detailed vision. But diabetic macular edema is even worse because it can cause total blindness. And of course, you have to have diabetes in order to get this particular disease. We can see how about 1.5 million people are diagnosed with DME, but only 200,000 patients are being treated, which leaves a lot of patients that still need treatment, still need Elia, and that only means great things, in our opinion, as far as continuing increasing those sales and profits. Let's take a look at some of those metrics here. The earnings per share this year off the charts at 70%. The earnings per share in the next 5 years is expected to slow some at about 11%, but still operating at a great clip here, and we believe a lot of opportunity to make some real money. And again, we love this because it's increasing revenues, increasing profits, increasing margins. I mean, look at the gross margins, operating margins, profit margins, just awesome. But yet the chart sucks, and we have a beautiful opportunity here to get a better deal. So let's use our brains here to get a better deal with Regeneron. You can see that we are on the REGN options chain. Over here, we are at the July 20th, 2018 expiration, which as of Wednesday, June 13th, gives us 37 days to expiration. And of course, we are looking at the put side of this options chain, and we are headed down to the $290 strike price here on the put side. So as we can see, when we zoom in a little bit, we can instantly make anywhere between $430 and $460 just by the press of a button. How easy is that? So we will click on the bid here to open up this trade. It then opens up the order entry window, which gives us all the information. Yes, REGN. Yes, July 20th, 2018. The $290 put. Yes, we want to sell it. We're just going to do one here, but if you want to make close to $900, you can sell two of these. For the sake of this trade here, we are just going to sell it for $430. Again, I can't stress enough, if you were doing this for real, I would try doing this at a higher price because you want to get the highest price you can. Why would you not? Try $440, right? Try, $4.40 in this case here, but try something higher. So for this sake here, we're going to sell it at the bid. We press the submit button. Of course, that second box pops up that gives us all the details. Is this all the things you want to do? Yes, absolutely. We hit transmit. And there we go. We just sold it, and we instantly just made $430.